Okay, hello everyone and good morning. It is Tuesday, April 21st, and I'm Michael Boutros here for this live intraday strategy session on SB Trade Desk. Good morning, Stephen, Jay, Joe, Joseph, Mark. We got a whole packed crowd today. Good to be with you guys this morning. So, into the nitty-gritty. We've been following the Aussie, we've been following the Kiwi. Euro Oz is of great interest. I think I may have just missed an entry. We'll go over that in a moment as well. As usual, I want to encourage you guys, any questions, trade setups you are looking at, feel free to throw them out. We'll be more than happy to delve into any pairs. Again, this is the SB session, so we have much more time. We have much more flexibility to get into the nitty-gritty. If you guys want to jump into the 5 or the 1-minute charts to see these triggers, more than happy to follow that with you. Terry, are you in the house? I got your email from this morning. I want to encourage you to get as many questions as you want out, okay? We'll go through this as slow as we can. There is more educational how-to material coming on SB Trade Desk, guys, on the resource page. As it stands right now, Terry, I'd encourage you to go through these last couple of webinars I posted here. It goes through a little bit more of the metrics of the basics of the strategy. Terrence says, yes, I'm here, Michael. Good to see you, sir. So I would encourage you to go through these 2 webinars, get the basics down. What we're doing is we're mapping out the market so we have our levels lined up. And then we're looking just to play these levels here with momentum triggers. So we're looking for the market to give us sort of like stare action to play the triggers, just a basic overlay. But feel free to throw any questions that you have. Let's jump right in. So Aussie dollar, here's what we were looking at last night. It was coming to that 77 handle. I did note that there's a convergence here with that median line off the high, proposed median line, really near term, guys. I don't like to stress these too much because, again, you don't have too much price action really validating it. But this was essentially what took us off what would invalidate the near-term short scalp. So we did come into this region. We probed a little bit deeper. We held that median line more or less. You had some divergence into the lows, so we couldn't do anything with that last night. I was really, on the 5-minute chart, it was actually a beautiful trigger against the opening range high. But with momentum unable to really give us a break of that divergence, it just wasn't available to take on the short side. So it's a good thing we didn't. But long story, that trigger on the upside finally did give out, okay? And that was a trigger that would have put you on the long side of the trade against the European opening range low. So I still think you got some more upside here on Aussie near term. Again, swing trades are actually looking for that stretch into 77 to get on the short side, but that's the exact same level, 77.80. It's the exact same level we're looking at. So again, there's a 236 and a confluence 618. This is a little bit longer dated from the decline off the highs that you made in March. The median line off the low also comes right in that region. So we'll be looking for the Aussie to give us some sort of reaction here. Not really interested in playing the long side per se. If the U.S. opening range turns out to be really tight and you get a break against 77.30, might be a decent play, but it's pretty tight. I'd rather be waiting for that stretch there to try to see if we can get some short exposure on the Aussie. Again, looking at this on the daily chart, it's not too hard to see this thing giving us a little bit more of a push higher before it turns there. All right, keep in line that dash line at 77.09. Very interesting level. That's the reversal day close that you made on March 12th here. As we were coming into the lows, you can see it's been a very nice pivot in price. And that's really what the near-term support is that we're looking at on the intraday chart. So I think another one that will give us a decent play here. Again, we got some squeezes out on the short side, but it's been kind of tight since the start of the week. Remember one thing, guys. Again, the weekly opening ranges, it's just Tuesday. So we're just getting started. The Monday, Tuesday stretch is typically what we want to use. And as such, a basic strategy, again, something we just look at objectively, not a strategy in and of itself, but the fact that we've made this Monday, Tuesday stretch into support from resistance, which was the premise of the whole trade. And we'll look for a break of this to validate, our near-term expectations here to see a pull lower in Oz. Any questions on that setup from yesterday? So here's what the 5-minute chart looks like currently for the Aussie dollar. Let me just check Euro Aussie real quick. Here's the Euro Aussie 5-minute chart. Again, this is the really tight opening range here. Here's the lows that you made for London. We'll go over this setup in a moment, but I'm stalking this right now for long triggers. This was one that just gave out, kind of teetering here. It is the opening range, so I don't really like to initiate new trades at this time, but we'll be looking at this one later in the session. Here's what the Aussie looks like. So You've been getting some divergence into the highs, subsequent high, 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 new high. Holding the highs, holding sub 70, and there's a trigger break. So this is a 5-minute chart. So I'm really interested to see if we get that final stretch into 77.80. We finally get a break of that trigger. It might be a nice short for the Aussie. A breach above, let's just keep things clear here. And this is why, Terrence, we like to make sure that we're mapping out the levels on both sides. So all we're doing here is just eyeing out the key levels that have either produced inflections in price or represent some sort of significant technical level. So a basic retracement of a stretch, an extension off the highs, that completed a 1618 right at 77. We already highlighted 77 on the daily chart, so we know there's major support here. You're looking for guidance in price. You're looking for slope support, slope resistance, technical structures that are guiding price action. And as we do that, these confluence regions become critical areas, Terrence, that we'll look to play, both on the reversal, both on the inflection, and to confirm our bias. So we started off the week on the scalp charts looking for a rally to sell. That was the first thing that we're looking to do to start off the week based on where the daily chart was and that we were coming into resistance. We opened up the week, held right below 78.40, okay, which was a 764 and the initial resistance level. We tagged the upper median line parallel last week on Friday. So we're just looking for a range break here to give us the short bias. And then once we cleared that 77.30 level, that was the near-term bullish invalidation. You're looking to sell rallies. You're looking to sell breaks of support. So now that we've made a trigger break to the upside on some divergence, that shifts the near-term focus back to the upside. So there was opportunity, like I said yesterday, to get long right with the break back above 77 against the lows. Would have been a really nice scalp. Initial target would have been 77.30. Again, this is the wee morning hours here in New York for Europe. So once again, actually, guys, for those of you trading European side, you actually are getting that swing again. If you remember a couple weeks back, all the scalps were playing out like into the European Open. We're starting to see that again, whether it's because of all the increased headlines, what's going on in Greece, or whether it's just because there's a sort of a lull here in U.S. data for the week. You are getting some really nice clean breaks in Europe again. So if you're still holding a long exposure here, stops would be brought up just below the European swing lows that you made here, looking for that final stretch into 77.70, 77.82 here, near-term resistance. Questions on the Aussie before we move on? Chris, I see your question on CAD yen. We'll definitely take a look. Chintan, Permendra, great to see you guys. Okay, so we'll be eyeing this one. Again, I'll give you some updates on SB Squawk later today if we do make any moves on that. Next up is Kiwi. A little bit of a slow drifter, but it was essentially the same setup. Okay, so here's what the Kiwi looks like on the daily. The major resistance is 77 to 77.30. I put a piece on this on Thursday on Daily FX. We went over this yesterday in the webinar as well. You're looking at a basic trendline resistance from October, the R1 monthly pivot, which is what it is. You're looking at the median line off the low, and they all converge right on this region. So it's a very similar setup in that we're looking for a reaction off of resistance. Obviously, we can't invalidate the uptrend yet, but we've been trying to play shorts against that region. Also look at the momentum signature. Okay, the 60 level has continued to hold as resistance ever since the highs that we made last year back in July. So, until that breaks, you can't assume that the downtrend is complete as far as the broader trade is concerned. We're treating this as a near-term correction. What does that mean for the Kiwi? Well, right now, all you're doing is playing the range. So here's what the scalp looks like. And here's what last night's piece looks like. So it's important to note that we're still putting in the weekly opening range. And again, yesterday we were noting that we'll be on the lookout for an interim exhaustion low to produce a rebound. Why are we looking for that? Again, early in the week, guys, it's very rare outside of an event risk or outside of a market external driven factor that you're going to see the market open up the week and just plummet. Very, very rare. And as the momentum signature, again here, like the Aussie, started to give us some divergence into that lows, you start to taper back your expectations, you start to taper back the momentum. Really, it was the break back above 76.60 right here, which was last night's invalidation level. Okay, so as soon as 76.60 gives out, 76.64, You're no longer looking for the shorts. If you're holding any shorts, that's where you're taking the trade at break even or a stop even. And you're shifting the focus to the upside. Unfortunately, there was no pullback in Europe here to get you back on the long. So if you were holding a short, you're out. If you're trying to initiate new trades, again, it's the opening range for the week now. So the major key resistance and the bearish invalidation level remains 77.26, 77.30. Are there any questions on bearish and bullish invalidation? Feel free to throw them out, guys. So what that does is it will invalidate that bias. Meaning, if we break above 77.30, we're not looking for the short triggers anymore. Now we're looking for long triggers. Now we're looking for pullbacks in price to get back on the long side. If the bearish invalidation, or the bullish, invalidation level gives out, the support barrier, that means once we break below it, we're looking only for short triggers, no longer looking for the long side of the trade. And due to the near-term flexibility of the strategy, we can play a long into resistance, reverse our bias, and play a short right back into support. And that's the flexibility, is that we don't need to be committed to a medium-term, to a longer-term bias. I can be as quick as I want. I can be long the euro dollar, and it's hysterical because it'll be funny. I'll be sitting on the desk with some guys, and not that this is advisable per se, guys, but just as an example, on a day where the euro is up 150 pips, we can be, up 40, 30 pips on the short side of the trade, just playing rebounds off resistance. Now, that's never advisable, and that's not what we're encouraging, but just to let you know how flexible the strategy is, okay, that we can still squeeze those rebounds off resistance. Yeah, they're much tighter to play. You got to have much more quick fingers, and typically we'll always want to go with what the near-term bias is doing. But it's that flexibility that makes this kind of strategy a little bit more comfortable for me. Terrence, you're more than welcome. And again, feel free to throw any questions that you have. Mark says, hasn't the U.S. dollar already tested the breakout trendline fork? It has. Mark, you're all over it. It's beautiful. So here's the dollar index, and you'll see this posted on MB4X and on Daily FX and on SB. It's the trade that we've been following very closely. So the slope support in the dollar index that finally gave out last week gave us the downside bias. The only thing that hung on is the objective monthly opening range. So peep this real quick. There's actually some pretty major levels here. The major support, the opening range low for the week, comes in 11.95. We probed through that on Friday, but no closes below. Okay. In fact, on a close basis, the opening range is almost even cleaner. And on the upswing here, the resistance level I'm looking for, Mark, and the invalidation level. Okay, someone's saying the sound is gone. Is there any issue with the sound? Chris. Okay, cool. Thanks. Keep me updated on that, Chris. Thanks for that, Jay. Mark, I appreciate it. The level I'm looking at, Mark, is I do think on a swing here, and especially if you look at the Aussie with a little bit more teetering out as well, but you can see that 1271 level right here. And this is the reversal day close. So the day that we made the reversal after a 3-day stretch into fresh highs, that close came in at 1207. Obviously, the key resistance is going to be 123, and that's the high day close right here. But yeah, I mean, if you just look at that basic trend line off the March highs, that could have called the high right here and could be limiting it. I don't know. I've been looking for the high to sell in the dollar, right? We've been talking about this. That was kind of the game plan moving into the week. And if you go back to the Kiwi here and the Aussie, both of which the ones are our favorite plays, again, I think you could probably stretch into a new high into the U.S. trade session. We'll see if the triggers give out. Let's look at the 5-minute chart here for the Kiwi. All right, looks like this is going to give out on Aussie as well. Yeah, and sometimes, guys, if we miss the trade, like on something like this, I'm not going to chase this, but that was the trigger. So, you know what? Let's just segue into the Euro Oz real quick. I want to show you this trade right now. I'll be right back on the Kiwi, guys. So here's the daily chart, the Euro Oz. Remember, the major key support, 137.88. This whole region down here is absolutely paramount. You have the low day close for the year. That comes in at 37.88, held like a rock on a close basis. This gives conviction. And why do we stress the close? Again, I say this all the time in the webinars, but for those of you who are new, a lot of price action takes place there. And that's something, where the market settles on the session after a volatile trade. Those are levels that tend to be more significant. Also, longer-term traders, guys on the banks, guys who are trading this, not intraday, a lot of times they're just looking at the close price. So those highs and lows in and of themselves will hold more technical relevance. So just something there to put it on the side. But again, the premise to start off the week was the fact that you're at key support. Momentum has been putting in some divergence, i.e. holding 40, and you look for the upswing. Here's what the scalp looked like. So this was on the radar, guys. If you notice on the intraday page, I kind of just added this piece here to give you a little bit more flavors on other setups that we're looking at. So I'm not going to necessarily be able to, step by step go through every single scalp that might be in play on a daily basis. Down here on the radar, I'm just going to throw out charts that are relevant, the daily and the intraday, so you guys can feel free if you have any nice triggers in there to jump in here. But yesterday's or Monday's Euro Aus, we were just looking to see if we were going to get that rebound there. And here's what the scalp looked like on Monday. We were just sitting right here. So there was actually a beautiful trigger that played out on the near term that gave you the upside bias. It went right through, just missed the median line resistance here. Might need to be adjusted, but in any event, kind of validates our near-term up bias. Now, what happened overnight in Euro Aus is that you saw this thing break what we designated as the bullish invalidation level, and that was 38.50. Okay, right here. So as soon as that breaks, we're no longer looking for the long side of the trade, and in fact, this thing dropped right into the 138 handle. All right, so now you're neutral. Hey, Eileen, great to see you. So looking at this right now, long story short, you're no longer bullish until we get through this again, but we're looking for the long triggers against the opening range low. So if you get a long trigger and a break above the Asia highs, for example, or the European highs, for example, that might be a decent play, but the invalidation on the daily remains this key support barrier. So you might get some more chop here. You have a trigger in momentum. I wouldn't even use that trigger. I'd be using the trigger right off the low, which would invalidate the long side. But, I'm not holding any scalps here. The whole point of this trade, guys, again, we are below that key level. But if the opening range for the U.S. session finally gives us a break to the upside, it would suggest that you're going to see some more swing and hold this formation in Euro Aus. So we may be missing the trigger here, but not going to go chasing just yet. Questions on the Euro Aus setup? I'm going to be tracking this one here today, guys. I think it's going to be a nice play if we do get that topside break and make it back above that slope. Let me just show you what this is looking at right here. So if this was a real break, we're checking it as support. A basic trendline resistance is there as well. This would kind of give us the alleviation move, that 139.85, essentially 139.90. Raj says Jamie is going long Euro Aus. Well, great minds, right? Guys, we're always on the same page. I mean, me and Jamie, we're very close, so we talk every single day. I don't know if he just posted something on the SB Squawk, but it looks very, very interesting to me as well. I do like that setup. And the closer you get, guys, to the opening range low for the week on a move like this, where you make a very clear Sunday, Monday low, or Monday, Tuesday low high, very clear, the closer you get to the extremes, it's always going to be your most favorable risk to reward. So that's Euro Aus. We'll see if we can get some upside here. Again, watch the New York opening range. Maybe we get an opportunity again before the webinar ends. Moving right along, back to the Kiwi real quick. So on that trade, again, it's very similar to the Aussie trade. I don't want to spend too much more time on it. See if you can get that stretch as close as you can to 77.26, 77.30. We'll be looking for short triggers on the near term. Again, this is another one that will probably give us some chop into the U.S. Open. Guys, outside of the data stream for today, here's what we're looking at. It's going to be kind of quiet for the remainder of the week. First of all, relative performance, this is what we're looking at heading into the U.S. session. The dollar is finding some strength against the pound. Swissy euro, biggest loser on the session, down 0.3%. Here's the Kiwi pressing into the highs, half a percentage point strong, right into right shy of resistance. So another reason why, we'll see if we can get that final stretch into that resistance target. As far as the equity markets go, here's what it looks like. Futures are actually looking pretty strong. So, if we take a look at that, we're still looking for a high, or a Dow Jones open 64 points to the upside, NASDAQ 22 points, 8 points on the S&P. So it looks like we're going to maintain that strength that we closed off with yesterday. Obviously saw a rebound of 208 pips on the Dow after Friday's, massive sell-off. I'm not going to stress this gyrations that you're seeing in equity markets, guys. By the way, here's what the S&P looks like. I just want to point out that the yearly opens right here, guys. You can see the low that we made was 2072. It's almost exactly where we opened the year. More importantly, where this thing keeps maxing out has been very clear as well. It's the high day close for February 25th. It's the exact stretch we made right into the end of March. It's almost the exact high we made for this month, and that's the resistance level. So watch that closely as you head into the U.S. trade session. That drop that we saw on Friday was pretty big. If you look at this, this is a one-day ATR, guys. So it's basically measuring the range for each candle, and it's basically telling us when's the last time we saw a range of that magnitude. It's not volume or anything like that. But if you look at this, since that Friday drop-off, that was the largest volume day we've seen since the reversal that took us higher again. Okay, and those highs are still respected. All I'm doing is pointing out this major key range. So before people start calling, Dow, S&P 2200 or whatever, you just want to make sure you're keeping the levels in view. Chris, I'm going to address that real quick. I don't want to go off on a rant because I can easily go off on a rant like that. He says, I appreciate the technicals, but struggling to get past buy the euro feels wrong right now. Grexit. So, Chris, I just want to put things in perspective for you, man. No one's debating the severity of the issue in Europe. I can have a discussion for you probably a little bit longer than Jamie about, what the whole fundy side of the case. But you got to keep in mind what we're doing here. Chris, if you're looking to hold or take a buy and hold stance in currencies, that's completely fine. There are people who do that across the board, right? But that's something where you want to take advantage of longer-term momentum swings and you're holding positions for weeks or not months on end. Intraday or even intra-week, Chris, a fundamental theme like that will never drive day-to-day price action, okay? Keep things in perspective with what you're trying to do. It's not just about what's the fundy story, okay? If we look at the euro dollar on a daily basis, yes, no one's gonna argue this is an uptrend. But look at the course of this trade. If you were bearish and just blindly bearish the euro based on the fundamentals, well, there was a pretty severe 2-week stretch here. You probably wouldn't have been very happy. You would have been down a good 500 pips, right? There was another 2 or 3 week stretch here. You probably wouldn't have been too happy, right, trading this intraday or intra-week because, again, there was a good 400 pip rally. Day-to-day price action, it's not something we're listening to. Do we need to be aware of what's going on? Yes. Do I need to watch the economic docket and be mindful of the releases? Yes. Major economic data prints? Yes. Am I going to use that to ascertain bias on an intraday basis, Chris? Absolutely not. Absolutely not. So just got to keep things in perspective, man. I mean, there's nothing. No one's saying that the euro is reversing broader trend, but there's nothing to stop this thing from making another 400 pip rally before it turns around. If you're someone who's holding a short from 112, you don't care about that, right? What's 400 pips? You're already 1,000 pips up. But for us, we're trying to take intraday trades. We're trying to take intra-week trades. We're trying to take swing trades. Isn't a damn thing wrong with taking a euro long on a clear-cut conviction trade. Obviously, risk to reward is everything. Every trade is taken on its own merits. But I just kind of want to filter that out of your mind. That's one of the main things we're stressing here on SB, guys. We don't listen to the noise. That's not something we're ever going to base trades off of. You're never going to see me taking a trade because CPI is low or something like that. I'll trade the reaction, sure, 100%. But just keep things in perspective. And again, sorry to go off on a rant, guys, but very relevant question, and as more Greek headlines filter through, I know you're going to get polluted with Twitter. I know you're going to get polluted with Reuters and Bloomberg and CNBC. Keep your eye on price, guys. Price is what we trade. Price is what we're profiting off of. That's what we need to focus on. So, Chris, hope that offers some perspective. You're more than welcome, man. Great question. Steven, good to see you, sir. Says, Mike, can you please give a quick rundown on all the different RSI triggers that you would use to enter a trade and how you would correlate the 5 and 30-minute RSI? So when we're looking to actually jump into the scalp, let's look at the euro since we're here. I do think this is at an interesting juncture at this point as well. Really messy on these near-term parallels, so I'm not really going to stress this. I've been looking at this broader one off the lows, which we don't really know if it's in play or not either. As you can tell, I was talking about this on Thursday of last week on last webinar. I'm really not a fan of trading euro dollar. The focus on the euro Aussie, euro yen looks beautiful. I just don't think the technical clarity is here per se on the euro dollar, especially with the daily chart, what it's doing. The support we were looking to hold at 107.09 right here, which was the opening range low for the month. It's not really giving us too much conviction. You're seeing this dribble below it here. So I'm kind of a little bit more concerned on the euro dollar, not really looking to play it per se. I do think it finds some strength here, but what I think doesn't matter. What price is saying is what matters. So long story short, let's jump into a pair that has sort of some triggers we've been looking at. So here, for example, is the Euro Oz. Let's go over this. I was actually looking at this last night. Again, some missed opportunities here, but I'd rather miss the opportunity and learn from it than jump into a trade without conviction and take a loss. So here's what the 5-minute looks like, okay? We're keeping in mind that these dashes here, by the way, for those of you at home, you can get this indicator. It's called Trade Sessions. You can find it on fxcmapps.com if you're using MarketScope. And it simply highlights the highs and lows for each trading session across the globe. Okay? So we're using these intraday to ascertain bias. So if the market opens up and for the first hour, first 30 minutes of the market, you set a high and a low. Okay, here's the Sydney Open. You set a high about an hour into trade. It came back, tested the low. We're looking for a break of that range to give us a near-term bias. So there were a couple of things here yesterday on the Euro Oz that actually prompted pretty nice short exposure. Okay, here's the scalp looks like. So we were looking for resistance up into this region, didn't quite make it. And then you got a trigger on the south side. What's happening? So the 30-minute on this one, Stephen, is showing you divergence into those highs, right? The market's making a higher high in price. Remember, you're only looking at the close when you're looking at divergence. The wicks don't matter. And the oscillator is making a lower high in price. Now I know you guys have heard me say it here before, but those divergence signals, when they happen on either side of the extreme, tend to be stronger signals. When both of them happen above 70 or both of the reference points happen below 30, those are weak signals. This, if it were divergence, wouldn't be a signal I'd necessarily work off of. But the closer to 50, the stronger. So if one of them is above the extreme, one of them is below, that's typically a strong signal. Now you have a 2-point trigger, not all that much conviction, but you're looking for that break. On the 5-minute chart, well, you had divergence there too. Weak divergence because it's above 70, but it's there. Price action making a higher high, the oscillator making a lower high. More importantly, now you have a 4-point or 3-point trigger. 1, 2, 3, little dribble there, and there's the break. So now 5 minutes showing me a trigger. The 30 minutes been showing divergence, okay? And what do I need? Well, an opening range break would sort of put salt on that one and make us jump right in. Now, obviously, if you wait for the opening range, it opens up your stop greatly. It's a wider range scalp. Remember, typically on the scalps, we're looking to take a quarter of what the daily average true range is. So if you're putting in 100 pips on a daily basis, we're looking to take 25. If you're putting 200, 50, and so forth. So as long as your stop can't be greater than 43 pips. If the trigger allows you to take that, great. If the trigger is late, well, If you can't put a stop 43 pips away, it's got to be greater. You simply can't take the scalp. And guys, you're going to see missed entries all the time. If you're trading a strategy like this, you can't stress and hit yourself on the head every time you miss an entry, because it's happening all the time. Across the pairs, there's always something that's giving you some sort of signal. It just so happens that the break in the trigger actually would have come in early ahead of the opening range break for Sydney, but not for Tokyo. So here's your Tokyo open. Here's the Tokyo low, and it would have been the break below 139.25. Stop against 139.50. It's 30 pips. You're looking for 40. As soon as you hit 40 pips, you start shaving off a few. You take maybe a quarter of the trade off, bring the stop to break even. Next level down. On a trade like this, I mean, honestly, 38.45, 38.50 is kind of where I would have cleaned up the entire trade, because that was the invalidation level. I would have been looking for longs here, but you didn't get any long triggers, right? And that's why to open up today's session, we're checking basic trendline support. Now I'm looking for long triggers, right? Because the weekly opening range is just lower, and I know that 37.88, 37.90 is my broader bullish invalidation level, so the risk to reward is there. So the closer I can get to an entry there or the stop, obviously, again, intraday strategies, it's not just a requirement that we achieve the level, okay? It needs to have a momentum trigger to put us into the trade. It's very important that we understand this. This is why we can't just throw out signals and say, hey, go long at 38. It's because the strategy is so near term, we need the momentum turn to give us that signal to get long. So I'm looking for long triggers as we hold this region here. If we get a break to the upside with a long trigger, great. If we get a break to the downside, not really interested in playing it, because it could be another emotional spike low. We could just test this level and rebound real quick. I'd be more inclined to take the longs here while above the weekly opening range. If we clear below this, listen, there's a lot of room. I really don't have anything until like 37.20, which is the stretch low you made in March. And then the 50%, 37.17, is where exactly we bottomed. This is a 50% retracement from the advance off the 2012 lows. So you do have a clear-cut target if we do break those lows, but for me, I'd be more inclined to try to play the rebound here. So Terrence, I don't have actually the rules mapped out in a list per se. Again, that's all still in production. There's still a lot of stuff coming down the pipeline, guys, for the resource page. So we'll have that up shortly. But there are tons of webinars. Raj says, Sterling Kiwi, please. This thing has done my head in. I keep going long and keep getting stopped out. Let me take a look for you on Sterling Kiwi. I haven't really looked at that for a while. Okay, so you're trying to play against this support barrier here, right? Let me ask you a question, Raj. What's prompting your long exposure? Are you seeing triggers that is putting you on the long side, or are you simply trying to fight against this support? Because the only long trigger that I would have assumed would have been something I actually would have been interested in would have been right here. And that's because this thing sat 40 for the entire decline off of last week's high. This hasn't been updated for this week. Here's this week's opening range. This retracement is null and void. This formation obviously doesn't hold any merits. Not now. Okay, could be in play here. All right. Here's what I want to say on this. There's a couple of things here, Raj, that would have prompted caution on the short side, or on the long side rather, trying to play that support bounce. And the first alarm that would have gone off in my head would have been the way we opened the week. Okay? What happened? So you gapped on the open. And gaps, guys, I don't necessarily, if you're newer to the market, it's not something that it's not something that you're going to want to really focus on. I've seen gaps play out a lot of different ways, and the basic premise is that the market will typically fill that gap. But the thing that people don't get is that the timing on that can be so variable. There are gaps that get filled within the session, and then there are gaps that, on a Sunday open break might not get filled for a month. So all those guys who initially start fading to try to press that gap, I would just caution on that. But in any event, we gapped lower. We came back to fill that gap or came back to fill the close that we made from Friday. That held as resistance as momentum held 60. Remember, in broader downtrends, you want to see that momentum hold 60. In broader uptrends, you want to see momentum hold 40. When we hold 40, 60, 40, 60, 40, 60, that's your exact range-bound market. And that's essentially what you've been getting here for the last, 10 days? So the fact that this held 60 on the way up, it filled that gap and then started to break down, that would have been an indication for me, not to press on the long side yet. From here, it doesn't really look all that appealing either, to be honest with you. Raj, says, on a weekly, there is a massive head and shoulders pattern on Sterling Key. That might be right, and I wouldn't actually disagree with you. But on a weekly basis, what are you looking at, Raj? If you're looking at weekly charts, man, trying to make intraday decisions, it's going to be tough. It's going to be tough. I definitely always have a daily chart to map those key levels, but am I going to take an intraday stab at a support because the weekly support is there? That's where you want to refer back to Jamie's strategy, where it requires us to make the rebound, come back, test that rebound as support, form a resistance, then you take the trade. So it's a different mentality, Raj, on what we try to do as far as attacking the turns. Trying to go long on the basis that the market is at support intraday is going to be very detrimental. Because support is made to be broken and so is resistance, guys. And if every time we head into resistance we short, you're going to take a whole lot of hits. Remember, we need that momentum term. We need that trigger to put us into the trade. Raj, does that make sense? He says that's true. Thanks. I just want to, again, this is based on the intraday. If we're trying to trade this on an intraday or intra-week basis even, looking at a weekly chart and calling it head and shoulders, that could take another 3 weeks to pan out, Raj. In the meantime, what are we doing? We're trying to press a low, and we never want to be trying to call the turn, guys. Trust me, from someone who's tried to do it a heck of a lot, especially early in my career, it's just disastrous, right? We don't call lows and highs. We call inflection points in which if momentum gives us some sort of reversal, we'll play the rebound. But we're never trying to call a high or a low. So I agree with you that this was support. And the same thing that we're looking at, if you go to the radar from last night, the same thing we're looking at on the trade for CAD yen, or Aussie CAD rather, both of these. We're just looking at it at support. It's not on the main intraday featured page. Why? Because I'm not necessarily sure that this is the low. We're just checking support. It's on the lookout, right? And that's where I feel, Raja, we should probably be on Sterling Key too. But let's take a look at Aussie CAD real quick. So again, a trade that's very similar to the Sterling Key you just look at, right? In that it's coming into major key support. This one would have turned out great on the long side, but I still don't have that conviction there yet because we haven't. In fact, let me take that back. There was actually a really nice trigger here. I'll show you in the intraday. But to take a longer-term stance to say this is a low, that's not there yet. So if you guys remember, as we were heading into the start of the week, we were looking at Aussie CAD here on the radar back on Monday. It was just gapping into this resistance, okay? And we said, this is the range in focus. This is a critical support barrier. This is the break that would confirm the reversal. What did we do? We filled the gap and plummeted right back into support. Now, I might have been looking at this chart, Raj, and saying, hey, we just came off of a major key support barrier. We've been watching this for months, right? Intraday doesn't matter. Intrasession doesn't matter, right? And that's where we need to keep our focus on what's happening in the near term. So we filled the gap broke. We actually came back and tested the gap as resistance, and then we got the 40 break in momentum. This would have been a sweet short against the highs. Again, looking for that drop into key support again. As we make this low, the trigger break here, 3-point trigger breaks to the upside. Nice long exposure here against the swing low for Europe, or Asia this was. You're looking for about 30 pips on the stretch. You already got that, but again, I think you could probably see this thing travel back up into 94.85, this region right here. So I just want to bring that attention, Raj. I'm walking you through this one. Where you're jumping into the position matters, and also what you're looking at to justify the trade is critical, man. I agree with you. Maybe the weekly chart is putting in head and shoulders. I don't know. But what I'm going to do today on April 21st, it's probably not going to be based on what I'm looking at as far as a multi-week, multi-month formation. Does that make sense? I hope that offers some clarity on that. Okay. Jamie has an entry point for the Aussie dollar, but this thing is reversing before the entry is reached. Does that revise his entry? No, Raj. So when we're looking at the scalp and the swing trades, guys, make sure we keep things in perspective. On a swing trade setup, what Jamie's posting, when those trades go out, those are the levels that are in play. I mean, if there is an amendment to them, he will let you know. But, guys, every time the market reacts, we can't look to adjust our levels. That's not how trading works. That's how people chase. So on a strategy like Jamie's, those are the levels. That's what you got to see to equate that trade. And why is that so, Raj? Because you got to remember, man, everything's based on risk management. Everything's based on risk management. So if you start adjusting your levels because of what you're seeing in near-term price, you're going to start pulling in your entries quicker. You're going to leave your stops out a little further. Market's going to make a new high. You're going to push this. You can't act like that, okay? You got to be objective. We're not going to sit there and adjust our levels, especially on a strategy like Jamie's. I'm going to leave those questions for him. Obviously, guys, the midweek strategy webinar tomorrow at 1 p.m. Eastern. Are we getting a 5-minute RSI trigger on Kiwi now? By the way, Mark, thanks for that, man. Mark has just linked the RSI2 indicator. So for those of you who want to get in on that, thanks for that, Mark. I appreciate it. There's the link for it. So you can add this oscillator here. Yeah, I think we did just miss it. Yep. There's a couple. That's the broader one that's kind of making it now, but that's a 3-point trigger right there. I probably would have looked. Again, divergence, not the strongest signal, but divergence into the highs of the trigger break. Yeah, that would have been a sweet short. So did just miss this trigger here, guys. Now let's just take a quick look on how we'll manage this trade if we were in it. All right, so first you just want to take a quick look back and see if there's anything major that we want to pay attention to on the advance. Again, this is a 5-minute chart, so we're not going to sit here and spend too much time on this. You know, when you're doing this at home and you're in the trade, we're just looking for reference points. Okay, cool. The high we made, 77.23, actually turns out to be a near-term 618 extension. Makes sense. I want to know that the level that we turned at means something and that it's not just some random turn in price that I'm chasing. So I'll look for some validation. Cool, there's something up there. Now I'm looking for what's a downside target where this thing could find some support. What do I need to really get the steam rolling on the short side? Well, in the immediate approach, I just want to see what the range high lows are. So we'll bring up trade session indicators just to highlight that for us. All right, cool. So the Sydney and Tokyo highs right about there. Let's tack on a quick retracement. Maybe a 618 comes up in that region where we can have a little bit more conviction on the level. Stop traffic, it's exactly where the 618 is. All right? Any structure to the decline? I don't know. Let's check it out. Well, a basic pitchfork off the high doesn't really give us too much conviction on it, but where does the median line come in? Again at that 618. Cool. Now we have confluence. This is the beginnings of a scalp setup. So had we taken that trigger that you just pointed out, who was that? Tom, by the way, good eye. This is the way we would be progressing through this trade. Okay, stops would be against the high. You're looking for about 25 pips per scalp. Initial targets, you maybe find a reprieve here. Where is the low for? The London low is still a ways away. But, this is how we would look to play it. As far as the momentum signature, also updating that. So here's a momentum resistance trigger. Mike, we're short. Why the hell are you looking for resistance triggers? Simple. If this breaks, I'm going to jump out of that short. Right? That means near term, the thing could probably go up into 77 again. I don't want to get caught losing my 20 pips. I'm only looking for 25. So we want to be really attentive to what near-term price action is. And another thing we want to look at, let's say this thing comes into those lows here that we made, this little pivot in price. Maybe it's a retracement. Maybe it's a 38.2. Let's see. It's right there. So maybe we come into this 38, and then momentum holds 40. That's another thing to watch. Okay, cool. Maybe we'll get out. This thing is holding 30. If we see a rebound back up, we'll take off the trade. Let the thing come up. If you find another short trigger on this side and this thing holds 60 as resistance, right back in it. Okay? And so forth. So, we want to make sure that we're being attentive to what near-term price action is saying. I hope these drills are helping, guys, and making some sense on your end. Feel free to throw out some feedback. If there's something that doesn't click, be more than happy to take a look for you. What about using fibs to predict highs? Mark, I don't use fibs to predict highs, brother, but I'll use fibs to target resistance. Very big difference between what I'm saying and what you just said. Predicting highs is the exact type of behavior we want to stay away from. Targeting highs on the long side is what we want to use fibs for. So if we're using extensions, for example, a lot of you, if you've been with me for a while, know I'm really big on fib extensions. The one that we just figured right here, right? So this is a perfect example. I'm not necessarily looking to play 77.23 to call the high, but on the long side of the trade, that's my target. If we get a resistance, if we get a support trigger break to the downside, sure, I'll play against it, Mark. It's very different from calling a high. Predicting a high, that term scares the heck out of me. So I hope we're clear on that. Mark says, if the levels match nicely, understand. Okay, cool. Little laugh there. All right. Eileen says, yes, making sense. Love the drills. Yes, it helps, says Steven. All right, guys, cheers on that. Tom, I got you. Steven says, would you use the low in price of the session to draw an RSI trend line, or the low in price and the low in RSI? Steven, great question. I always will typically favor the low in price. Okay? Meaning, when you're looking to take these triggers, this is an example of when I didn't use it, but this was highlighting divergence. A new low, a higher low. So there are times where you see a trend line there. Doesn't necessarily mean using it as a trigger. I'm just highlighting the divergence in price, that we're making a higher low and a lower low. But typically when I'm looking to take the triggers, yeah, I'm typically much more favoring taking them right off of the low in price. And remember, when I say low in price, I'm not talking about the wick. I'm talking about the close low for the candle. So oftentimes you'll see me just do this real quick. Okay, that's the low. That's the low reference point in RSI I'll want to use. Make sense? Steve says yes. All right. Awesome. So this is actually a good example right here, guys. So at this point, right, this trigger hasn't really given out yet, right? And we're still haven't seen the open of U.S. markets. So on a scalp like that, guys, just be prudent. I don't want to encourage you guys to jump out of trades early, but it is important to note one thing. On the open of the markets, if the market gives you a clear signal against your bias, there is nothing wrong with taking that trade at profit early or bringing the stop to break even. If we go through the records of all the scalps that we take on a day-to-day basis on a weekly, there's a lot of break evens, and I'm completely okay with that. It's not what I aim for. No one's going to make money taking break-even trades, but that's how tight we have to play it to the heart as far as risk management when we're putting this volume of trades in on a daily basis. So just a quick food for thought there on that front. Chris, did we look at the CAD yen setup? No, I don't think we did. So here's the CAD yen setup. This was also on the radar yesterday at an interesting juncture. So here's what CAD yen looks like on the, oops, this is not it. Here's what CAD yen looks like on the daily. Or here's what it looked like yesterday on daily, and here's what it looks like today. You put in a nice doji, which is typically going to be an exhaustion candle, an inside doji nonetheless, inside day doji. Long story short, this thing is heading into resistance. The reason it's on the radar, non-operative scalp, is again, we haven't gotten the clear-cut conviction turn, and this thing is giving conflicting signals, meaning the April opening range broke on Thursday, or was this on Wednesday? Okay. The move surpassing 96.60 keeps the upside focus while above this region. But near term, momentum's holding 60, and we've been unable to clear this median line, proposed median line off the lows. So near term, yeah, you could see a pullback right back into that 96.60 level. Might be a nice scalp. It's 100 pips away. What does the intraday say? This is what it looked like yesterday. It's holding a ridiculously tight channel. The reference points have been very, very clean, even on the near-term advance, just so off the lows from April, you can see really, really clean-cut lines, right? So here's what the intraday looks like now. We're still holding that. Still holding that. So haven't really gotten any clear-cut triggers. I do like the broader upside of the trade as long as we stay above the opening range. Here's a trigger that's in play but hasn't given out yet. The opening range for the week, very clean. Okay, you're looking at basically 97 support. Let's call it 97.70 resistance. No, maybe a little higher, 97.75. So if we clear this, it's been holding 40 as support, and you get a 60 break to the upside, and you finally clear the weekly opening range high, yeah, look for a smooth sailing into like 94.40 maybe. Major key resistance is basically at the 99 handle. You have a very nice confluence up here with a 50% retracement from the decline, and the 1618, if I'm not mistaken, off the low. Let me just scroll back here. The 100 off the low. So my favorite use of fibs are going to be these types of confluences, guys. A retracement from the decline and a structured advance puts the 100% extension at 98.80 off of these three reference points, and the 50% of the entire decline from the December highs at 99.11. Bullish invalidation will be a break below the median line. What would put us bearish would be a break back below the formation. So another setup on the radar we'll be watching. I'll give you updates on this as long as I think it's relevant. I just don't think it's quite as clean yet because we're still in that weekly opening range. We're still kind of chopping around. And I'm very hesitant on the yen in general, but a setup that we'll be watching here for some sort of breakout near term. Jumping into the commodities really quick, here's what gold looks like. Again, there's a no play here for me. I'm not interested in playing these levels. Outside reversal day yesterday, we talked about momentum looks like it wants to make a break of this support trigger. But at the end of the day, guys, the broader trade stays constructive above this region. Even if you get a spill into 1173, 1177, for me, that's the buy zone. I would actually be interested in holding the long bias as long as this major region holds as support. As far as the crude trade, we talked about that one yesterday too. Someone was asking here in the room. It's pressing that level right now. Remember we talked about 57.47, 57.50. We're pressing that level right now. Again, that momentum trigger that we talked about is still kind of just sitting there. But this was a clear break of the monthly opening range. And even if you get a pullback here, again, into 54.80, or excuse me, into 57.70, 54.70 into the 54 handle, if I say that right third time, that's going to be your bullish invalidation. So as long as we stay above that, you got to respect the possibility for a nice stretch higher here in crude. Quick wrap up on the dollar yen as well. We talked about that yesterday. The daily chart looks like we were right. We couldn't get a close below that. We talked about this thing probably being the fake out of the century. Look on a closed basis, guys, the reaction off that median line. Momentum couldn't even go for a test of 40. So you probably get a little bit of a ripperooski here as the dollar finds some more recovery. Mark, we were looking at the dollar index earlier. We're kind of pressing back higher again. So again, watch 12,071 here. This region, oh, that's not what I wanted to do, is where I think you could probably see a little bit more of a resistance level. And that's, I think, where we want to reassert a little bit more aggressively on the long side of some of those other dollar crosses that we've been following. Is there a way for you to post your daily dollar index on the site? He says, I'm always jumping the gun, LOL. You've been all right, Mark. You've been finding some really nice setups, man. Eileen, I actually do post a daily chart for the dollar index on my Twitter handle, which is always going to be on the SB Squawk feed as well. But if it's something you guys think is helpful, yeah, if there's more people in the room who want to see that, guys, we could definitely post it on the Intraday page. If you guys haven't noticed, there is a wonderful piece that Jamie put on the homepage for the dollar index just recently. Okay, here it is. This is kind of the expectation, exactly what is panning out as we speak. So the purple route, essentially, is what this thing is trying to take right now. We're going to see how high that holds. The pitchfork he's looking off is just off the highs. All right? So he's looking at the same region, same stuff we're looking at here. All right? And the possibility for that kind of maxing out and finding us some resistance to get on the short side is why we're a little bit more cautious on trying to play anything on the short side of the dollar yet. Let the rebound find some resistance, let the momentum turn, and we'll look to reassert that on the short side. Eileen, make sense? Says I may have missed it. I'll make it a little bit more of a point, sure, to broadcast that, but anytime. Yeah, dollar index, again, I know we can't trade this stateside for some of you guys. We're just using it, really nice base dollar movements. So you get a nice, more graphical representation of what the dollar is doing. Remember, at its inception, this is an equally weighted average with the euro, Aussie, sterling, and yen. So just the four most heavily traded currencies against the dollar, whereas the ICE dollar index, your typical DXY, is going to be the basket of 6, which is much more heavily weighted, more so towards the euro. So I'd like to use it as a nice gauge of what the base dollar movement is doing. All right, so you might hear that ringing in the background, the clapping. That is the open of U.S. markets. Guys, we're going to wrap it up here. We'll be back on tomorrow at 8:30 again for another hour. Hopefully you're finding these drills helpful. Again, I'm going to be watching that Euro-Aussie setup. The Kiwi does look good. Sorry you missed that during the webinar here, guys, but I think the drill kind of clarifies some things. I will be watching the Euro-Aus again to see if we finally clear that near-term opening range. Looks pretty clear, guys. Again, on a 60 break to the upside here and a move above those highs that we made midday here in London. We'll see if we can get the recovery. Broader trade looks pretty good as long as we hold that major key low in support. I'll see you guys tomorrow. Best of luck trading. Cheers.